G'day and welcome to Motley Fool Stocks in Focus. I'm Scott Phillips, the Motley Fool's Chief Investment Officer here in Australia. And welcome to the series where we take a bit of a dive into some of the most widely owned, largest, most talked about companies on the ASX. Whether you're watching this on YouTube or listening on Motley Fool Money, thanks for spending some time with us. I'll tell you a bit more about both those in a minute. But first, I'll introduce today's guest, Motley Fool gun analyst, Mitchell Lawler. Mitch, g'day.
How's it going, Scott?
Mate, I'm very, very well. Thank you for spending some time with us and sharing your expertise. We're going to talk about a company called Zip. Plenty of people know it. And I've got to say, mate, I do regular radio spots and I often talk about the top and bottom movers on the ASX. Zip is almost always in that list or somewhere thereabouts. It's been a fascinating company to follow, to watch. And of course, we're going to hear you analyze it in just a second. Before you do that, I'm going to share a couple of thoughts with our audience. Firstly, the usual disclaimers. This is general advice only, not personal advice. We can't give personal advice here at the Motley Fool, and if we did, we have to use massive amounts of paperwork, thick documents, and all sorts of fun stuff. So we can tell you what we think about a company. We can't decide if it's right for you. You've got to decide that for yourself. Second thing, we're recording this in the first couple of weeks of May 2025. If you're listening or watching this at some future date, our views may have changed. Now, we're long-term investors at the Motley Fool. Hopefully you know that by now. Our views won't change too often, too quickly, but anything can happen. The company's fortunes could change, competitors, the price, of course, could move. So again, when we share our thoughts, we're sharing them at a point in time. Please just remember that if you're listening or watching to this, listening to or watching this meaningfully later than the middle of May 2025. Now, before Mitro let you loose on this particular company, I'm going to just share with our audience two things. Firstly, if you're watching this on YouTube, thank you for sharing a bit of time with us. I'm sorry you look at my ugly mug, but that's the way YouTube works. Do yourself and do us a favor. If you enjoy this video, I know you will because Mitch is great, hit the like button below. Why? Well, it's good for our egos, but also helps people find the video and find the channel. And again, if you're watching this, you're probably liking what we're doing. Make sure you subscribe to the channel. Hit the little notification bell just below me somewhere. That'll make sure you're alerted whenever we release new content. And we've got Stocks in Focus, Stock of the Month, what I've been reading. We do regular regular YouTube Q&As live on YouTube. If you want to get all of that stuff, make sure you do. And by the way, check out Motley Fool Money. That's our podcast, and make sure you subscribe to that one as well. And if you're listening to Motley Fool Money right now, thank you. Check out the YouTube channel. It's just Fool AU, or just search Motley Fool on YouTube. We do have an American business and an Australian one, so find Motley Fool Australia. That's where you find all of our stuff with our accents. Our US cousins are great, by the way. Check that stuff out as well. But this is going to be on the Motley Fool Australia YouTube channel. All right, enough ads, Mitch. Mate, I think most people probably know roughly what Zip does, but tell us the full story. What is Zip? What does Zip do?
Yeah, so Zip is one of the big names in the buy now, pay later space. And I think, as you mentioned, a lot of people already know what that is because they've probably already used it before. And so I'll give a bit of a brief overview, but essentially before there was buy now, pay later, there was lay-by. Some of us maybe are too young to remember lay-by, but
Be nice, be nice.
I do recall when I was a kid and wanting a particular toy, and we didn't have the money for it at the time, and so you put it on lay-by, and essentially it was kept at the store, and you contribute money towards it over time, and once you actually paid off the full amount, you got to walk out of store with that item. And buy now, pay later really flipped that on its head, I suppose, and solved two issues. Which the first is stores were collecting a large inventory of stock when they were putting a lot of items on lay-by. They're out the back, taking up space. There's a real cost to that. And secondly, people really want the things that they want today, not in a month's time, not in 6 months' time. They want it now. So buy now, pay later allowed solved those two issues by the company such as Zip. They're essentially a intermediary, and they provide the upfront payment for the item to the merchant, so they get made good, and then the customer gets to walk out the door with the item today, the moment that they want it, even though they haven't paid for the full product. And then the customer will pay that item off in installments, similar to lay-by, but to Zip rather than the storefront.
Nice, great summary, mate. And again, people used it. There's also the kind of 48-month interest-free kind of deals that have gone around. Buy now, pay later, it's not even a particularly new concept, new-ish, but, just another form of debt. And of course, Afterpay, the big rival for Zip, really kind of, amplified and made it cool, really exploded this section. There's quite a few players now in this space, including today's company, Zip. Now, tell us about Zip, the business.
Yeah, so Zip the business, they have a few different, I think there's about four different products that they offer. Zip Money, Zip Plus. They're all variations of the dollar amount in which they cover for the consumer. Most of them are free, as you mentioned. So they really make their money through a payment from the merchant. So the merchant is getting that value from not having to store the inventory. They're also getting better conversion rates. They're getting more sales, often is the case. And so they're willing to pay businesses like Zip money for that. And then Zip also typically charges some fees to the customer as well. If they have late or missed payments, they might incur a fee. And then in some of the other offerings that they have, they do charge interest just like any other lender would. And I suppose a point of difference with Zip compared to some of the other buy now, pay later companies is that Zip has had a credit license for a while now. They've taken a proactive approach in really accepting that the general understanding of the industry is that buy now, pay later is credit, or it's very similar to credit. And so they have been at the forefront, I guess, a little bit more proactive than its peers in adopting that that approach to it. And I think that's a positive because there actually has just been some recent regulation that's come out in Australia where buy now pay later will actually be treated as credit. So I think it's from the 10th of June this year. Anyone providing a buy now pay later product in Australia will need to have a credit license, and Zip is in that position where it already has that.
Beautiful. Ready to go, mate. Let's go from the company to the investment. Now, we're not going to give a formal recommendation today. We're just going to simply share some thoughts. So, Mitch, I'm going to ask you for the pros and the potential cons of an investment in Zip. Let's start with the pros. Why would someone watching or listening want to consider an investment in Zip?
Yeah, I think the positives is that this is a really fast growing industry, and there's a lot of potential still. I mean, younger demographics generally seem to have a aversion to traditional finance. They don't necessarily trust credit cards and the big banks that offer those solutions, and they're more comfortable with these more modern, more approachable, app first solutions offered by the likes of Zip. So as the demographic, comes of age and are becoming big spenders in the economy, Zip is sort of in a position where it could gain a lot of that wallet spend, that share of wallet over time. And it's a large market. They have a quite a significant position in the United States, which is actually bigger now than its Australia and New Zealand operations where it first established. Um, and so yeah, I think there's a lot of potential, and it is, some people may not like the concept of buy now, pay later, but it is being used. We have to accept the fact that it is popular. Some people might have heard that one of the recent music festivals, Coachella in the United States, about 60% of general admission tickets were financed using some form of buy now, pay later solution. So it is very popular, and I think that's probably a trend that won't really be leaving anytime soon.
Yeah, nice summary. I personally, I hate it. As a financial advisor, I'm always worried about people's finances. I hate buy now, pay later. It just encourages more debt. Some people say they're better than credit cards. It probably is because there's no interest, I guess, at some level. But anyway, that aside, as you say, what we think about the product versus the company are very, very different things. I can just like something doesn't mean people aren't going to use it. So you're right. We have to look very clear-eyed at the investment thesis based on the usage of the product, the profitability of it, not whether or not I wish it was could go back into the hole from which it crawled out. But that's a whole different conversation, Mitch. Let's just flip the tables. Let's talk about the cons. Why would people maybe be cautious or avoid an investment in Zip?
Yeah, I think the big thing that the big risk to Zip is that with this further regulation, where it's being treated more as credit, yes, it's been proactive in having a credit license, but I think that also levels the playing field across the board. So it now is on the same page as any of your other lenders. You know, your American Express, your big banks, um, and in that environment, I struggle to see how it really differentiates itself, where it will be able to set itself apart. You know, even PayPal, which has a huge base of customers. I think it's over 400 million active users of the platform. It now offers installment services baked in to its platform. Commonwealth Bank is the same. It offers installment um, products through the CommBank app as well. So I don't really know how it maintains some sort of competitive advantage to ensure that it can have a margin. And on the topic of margin, it's still I don't think it's really net profitable. The management team talks about cash profitable, which leaves out interest in that calculation. Interest is a very important part of this business because Zip has to take on a lot of debt to actually finance these upfront payments to merchants. So interest is a large cost, and I think it's you can't really just ignore that when you're looking at the profitability of the business. And secondly, it is very susceptible to economic downturns. You know, because of that interest, because it is funding customers largely discretionary, some non-discretionary. But as people come on hard times, um, these are unsecured loans. There's nothing to go out and say, "Oh, hey, give me that back to cover your outstanding payments." You know, people are using this to fund burritos in fast food, so it's gone, it's consumed. So I think it's a risky business in that regard as well.
Nice. So, a very nice set of pros and cons. Again, not a formal recommendation, Mitch, but I am curious. Do you reckon it's going to beat the market over the next 5 years?
Look, I think I used to be pretty optimistic on the industry. I actually own shares in Block, which acquired Afterpay a number of years ago. Not that that has performed too well for me over the last few years, but yeah, look, I think the sticking point is trying to produce profits. Like as long-term shareholders, you want your business to be profitable over time, and you want that profit to be sustainable. In an industry that's becoming more regulated, leveling the playing field between traditional credit and this new form of credit, I really struggle to see how Zip would necessarily outperform the market in the medium or long term.
There you have it. Thanks for watching and listening. Mitch talk about Zip, ZIP, by the way, is the ASX code. I didn't mention that at the top, and I should have. Some bright spots, maybe some risks, and a question as to whether there's online. If your product becomes someone else's feature, you're in trouble. Is the future for buy now, pay later standalone middlemen like Zip and Afterpay, or is it going to be the payment providers like the PayPals and the CBAs that offer those services? That concern is enough to keep Mitch on the sidelines on Zip. Again, we can't tell you what you should do personally, and our views may change in the future. Thanks for watching. Thanks for listening. Do subscribe to both the Motley for Money podcast and our YouTube channel. Lots more great stuff coming from where you're currently listening to or watching this. Thanks again for being with us. Until next time, for long.